Good morning, Mrs. Georgette Harper and Miss Monet Howard. It's definitely a pleasure to meet you on this Tuesday morning. Thank you, both you ladies, for your time and your presence today with today's podcast. Of course, today we're discussing the financial components. Um, the portfolio to financial freedom is how I labeled it. So, thank you, ladies, for your time and energy. Before we get started, I like to do sort of a professional disclosure that I like to give individuals with the podcast, and of course, is more so with the community. Chrissy's Voices of Reasons, our organization will invite an array of special guests to our podcast who will share their personal and or professional perspectives for today's topic. The insight shared is not intended to personally treat, diagnose, or in this case, financially tell you what your specific situations is. It's more of an insight to help guide you and direct you on some of the financial decisions that either maybe you have considered or maybe have not considered. The insight shared is not intended to tell you specifically what you want to do. And of course, towards the end of the podcast, these ladies will have the opportunity, if you have additional questions, to reach out to them directly. Well, they'll be able to answer any questions you may have, or just the opportunity to follow up with their organizations for services that they may offer. Um, we do ask that if any concerns outside of what you shared is outside of what they specialize in, to definitely reach out to those other individuals in the community that may be able to address those concerns specifically. We ask you to remain mindful of their perspectives, um, and to be respectful of their thoughts and feelings, just as though you would like for others to be thoughtful and respectful of yours. Again, this podcast is being pre-recorded or recorded live discussions. By commenting and engaging on the platform in any shape, form, or fashion, you are consenting um, to for your information to be displayed on our platform and our podcast. And of course, Ms. Harper and Ms. Howard have definitely completed the disclosure statements in regards to the podcast. Awesome. So I have Mrs. Georgette Harper, Miss Monet Howard. Miss Monet Howard, would you mind going first with just introducing yourself and telling us a little bit about yourself and the organization that you work for?
Yes, yes. Hello, everybody. My name is Monet Howard. I am a regional vice president, and we all operate a financial services office. Is Ready to Dominate Financial Group, and what we do is we help families. And I love the message today is to become financially independent, financially free. What we understand is that a lot of families know that they want to become financially independent, want to, have that financial freedom, but may not necessarily have all the game plan strategies and tools to go out and do so. So together, my team and myself, what we do is we go out and we talk to community, talk to family members, talk to friends, co-workers, all of those things to make sure that we educate families on those tools. So myself, I am licensed in several states with life insurance, also have investment licenses as well. To be able to help families with retirement savings, life insurance, college savings planning, all of those things. So definitely thank you so much for having us on this call and actually creating this platform so people can go ahead and get that financial information.
Yes, ma'am. Thank you. And of course, we have Miss Georgette Harper. If you can tell us a little bit about yourself and the organization that you work for as well.
Absolutely. Good morning. My name is Georgette Harper, and I am a licensed agent with the company as well. I have the pleasure of working side by side with Miss Monet Howard. She is my regional vice president in the company, and I have been here just a little over a year now. So I'm new to the field. Prior to coming into the field, I was a licensed mental health counselor in the field of substance abuse and mental health for over 20 years. So I was definitely a fish out of water when this was introduced to me. But it is definitely a pleasure and an honor to be able to meet with people each day and each week to help them reach goals of financial independence and financial freedom. So, what an appropriate title that you have for us today.
Thank you so much. And I just have one question that just came to me because that is a big jump to go from mental health to how has that transition been for you with jumping from mental health to the financial sector?
Yes, yes, absolutely. So I had no idea what I was jumping into. I did. I was actually a client myself with a friend of mine. And when I saw the information or heard the information, should I say, we do a wonderful presentation where we use to educate our guest. And so from that information, I realized how relevant it was in just in my personal life, but also how relevant it would be in helping my family reach their financial goals as well as our community. And so initially I thought that I wasn't sure if it was going to be a good fit because I didn't know anything about financial services. But the educational piece really drew me in to relate to how we help clients with financial goals, things that we were never taught in school, even in our own personal households. And so that kind of bridged the gap for me and sealed the deal.
Awesome. Miss Howard, to be nosy, to be nosy, what brought you into this sector and the field that you're working in within the organization?
Right. Thank you for asking that as well. Right. So definitely, Georgette and myself have some similarities. When I was introduced to the financial field, I actually was a school counselor, also a licensed therapist. So I was doing, in-home family therapy. And one of my coworkers actually was working with the company part-time, and she really bugged me to sit down with my husband and myself because she knew that the information was so important. So she came over and shared the information, really was blown away by it. Just because nobody knocks on our door says, hey, this is what you're actually supposed to do with your money. This is what you're supposed to do with your finances. And we deal with money every single day. So I'm like, okay, I definitely need to be a client of yours. But she also offered me the opportunity, why don't you get some financial licenses and help other family members and friends that you know? And look, I'm not a stranger to additional information, but definitely just did not make sense to me to hold on to useful information I know that my family members and friends also needed as well. So I said, you know what, I'll go ahead and gain the licenses. And what happened was that in 4 short months, I started making more money on my off hours than my full-time job. So I said, look, we need to make this a business. Me and my husband basically resigned what we were doing. And in about a year after that, we opened up our own office, and I haven't turned back. We've been in the business over 7 years now, and we really love and enjoy helping not only people understand how to go ahead and make those financial game plans, but now let's share the word, right? So become a client, learn the information, but now you can gain some licenses as well and help, people in your community. So definitely, thank you for asking that. So we have some similarities in that. Did not know anything about the financial services field, but knew it was important.
Wow. So two strong, impactful women, two pathways in the human services field, helping individuals, but finding another career path that's just as equally fulfilling. That's awesome. Oh, maybe I need to revamp my resume. Awesome. So, of course, I know you ladies from just starting, whether it's a year or how many years, Miss Monet, you've been in.
Yes.
There's various things that you've learned throughout your career development in regards to financial sector and information that's out there to help the individuals in the community. So, with working with individuals, and I'm not sure which one would pertain to, I guess I'll just throw the question out, Hail Mary, then whoever answers, answers. So, how do you determine financial strategies for each person that you encounter based upon them coming up and requesting services within your organization?
We do have a great tool that we use called a financial needs analysis that we use to help individuals identify or clarify what their current monthly income is after taxes. And from that, we look at how much of that income would their family need to continue and maintain their daily functioning if they were to pass away. Very crucial information and a pivotal point to help people to raise their awareness of, what would my family do if they did not have this income coming in. And so from there, we do look at some other aspects as far as their age, their gender, insurance does look at things like, your medical background to determine, how much monthly, the premium would be cost. But we also use that information to determine how much income not only would their family need on a daily basis, but throughout their potential lifespan to adulthood. If they have small children, we definitely want them to reach adulthood if something was to happen prematurely to their parent while they were still minors. And so from that, we gather what we call their financial independence number, also known as the income protection number. And that is what we base our recommendations for coverage on.
Awesome. So I know you come across a wide range of clients, some older, some younger. Probably some of the younger ones, even now in today's time, may not know a lot of information as far as life insurance. And I know a lot of individuals may ask the question, do I really need life insurance? What would be your answer to that?
Oh my gosh, that is a great question, and that is a passion for me. Just FYI, I definitely, it's a mission of mine to specifically reach out to the younger generation because they do tend to feel that, I'm young, I'm healthy, I've got a lot of years ahead of me. Why do I need life insurance? And so, yes, we do speak to that age group. We do have what we call a qualified group that we target between the ages of 25 to 55. That doesn't mean that someone under 25 or over 55 uh, does not need life insurance, but we know and understand that that is a critical age group that they're generally healthy. Um, Not always, but generally. And hopefully, if they, are working, they can afford it, right? And then they can enjoy being locked in at a rate that will allow them to not have their premiums, fluctuating throughout their lifespan. So getting, again, it goes back to educating and why it's important. And I'm sure Ms. Howard can help me out with some other information that we use to, encourage people at a younger age.
Yeah. And just to answer the question, do I need life insurance? Young, old, in between? Absolutely, right? So if we are living, we need life insurance, right? Because we just don't know, number one, what our date of death is, right? So the most important days to get life insurance is today and then maybe the day before we're going to die, right? But we just don't know what that day is. So absolutely. And when we're talking about getting life insurance when we're younger, that's when we have the most chances of being healthy and qualify for it. What most people don't understand with life insurance is actually like a privilege. You have to qualify. You have to get, go through an application process. And we have to make sure that you, not only as far as your health is concerned, but your age does matter in regards to getting life insurance. So when is the best time to get it? As young as you can, as early as you can when you're thinking about it, because we just don't know what happens. We don't know if we're going to get sick and then we can't qualify. And unfortunately, we get that a lot where clients are coming in with the almost like the shoulda, coulda, woulda. It's like, oh my goodness, if I would have known about this earlier, or, health conditions come up and now they cannot qualify or their premium is a lot higher than what it would be. So definitely we want to make sure that we lock that in because we know that is our foundation. That starts our financial house. We just don't know. We can't, die then come back to life and get the life insurance. And we never know what day that is going to be. So definitely we get it as soon as possible. We do not want our family members and friends having to, do a GoFundMe, a fish fry, all of those things to handle a burial because they're already mourning for a loss of a loved one. So yes, we need life insurance. If we're breathing, if we're living, we need life insurance.
Absolutely.
Yes.
So I know the company offers other arrays of services.
Mhm.
Um, and I know a lot of that has to do with, I hear people often talk about, and some of it I know insight to, others I
Sure.
don't. So I'm going to pick your brain today to try to get as
Okay.
much information as I possibly can. I often hear individuals talk about traditional IRAs or Roth IRAs or 401ks. Like, what information do you have on that piece? Because a lot of people are not educated. Some individuals are not educated enough to know, hmm, to educated enough to know at least life insurance, what that looks like, but to go deeper into other aspects of planning for your retirement and things of that sort.
Right.
Can you sort of explain those so that
Yeah.
individuals are educated on that piece?
100%, yes. So look, so what we talk about first and foremost is in our financial house is what we call it is that our foundation is the life insurance just because we don't know. But then we start going up. So let's think about our financial house like a regular house, right? So we knock it down, we build it, we start with the foundation. But then the next step here is we have to start thinking about a 3 to 6 months worth of emergency savings. That's the first key, right?
Mhm.
We don't know because look, if we have an emergency, our roof leaks, or we lose our jobs or anything like that, then what? Right? So we don't want to have to
Right.
rob Peter to pay Paul. And sometimes what I find with our clients is that they start talking about credit, they start talking about college savings for their
Mhm.
children first, or start talking about their retirement. But look, we have
Mhm.
time. Our children can get scholarships if need be, right? If
Right.
we don't have the money, we do have some time for retirement. We don't have a lot of time, but we do have some. But an emergency, we just don't know. So that's the next step, to start thinking about our emergency savings, having a plan and a goal to have 3 to 6 months worth of money sitting to the side just in case something happens, right? Then our next step now is to start talking about retirement, right? Because again,
Right.
we have some time, but not a lot. And the earlier, the better. So we go over something that's our FIN number, our financial independence number. And that number is a lot of times when people are thinking about retirement, they're thinking about an age, right? They say, oh, I'm going to
Right.
retire. Retirement age is 67. But retirement is not an age, everybody. It's not an
Mhm.
age. It's
Mhm.
actually a number. It's how much money do you actually need to have accumulated to make sure that you never run out of money. That's your financial independence number. And that's what we go and we talk to our clients about. We get a goal and a game plan from them. Okay, what is our expected retirement age? What do you want retirement to look like? Some people want to have a home, some people want to travel, some people want to do all these things. So we go over goals, right? What does it look like for you? So we can make a individual game plan there. So that's where the IRA and traditional 401k conversation goes right in there. Right. And I'm going to get back to the IRA. I just want to finish the house first and then we'll come back to that. But then the next thing now is we're going to start talking about college savings for children. Now we can start doing those things, right? If we have extra money to put into the house, we'll start saying, okay, let's start planning for our children's education fund and how we're going to set them up. Maybe they don't want to go to college. Maybe they want to start a business on all these things. And how can you set them up for that? So what's the goal there? And how many dollars can we put there? And then to cover like our roof to protect our house, we're talking about wills, trust, power of attorney, because the last thing you want to do is this. You don't want to accumulate all these treasures and wealths and all these things and work hard to do that. And if we die, prematurely, these things aren't in place. The state determines what happens to your assets, to your family, and it breaks up a lot of families, because some people some don't even realize in regards to just a power of attorney in a living testament, just in case if I'm sick. You hear stories all the time where maybe the parents say, look, keep them on life support. The spouse says that's not what they wanted, right? And then now the family is going back and forth and arguing in regards to it, and just breaking up families instead of being there, right?
Right.
So we don't want other people to have to determine those things. We want to put all of those things, and that protects our finances by having all of those things already in place. So boom, if we do that, we build a straight financial house that's secure from the foundation, secure foundation, and then definitely the roof is secure. Right. So when we're talking about IRAs and retirement and all those things, number one, with the different types of IRAs and 401ks, what we suggest to our clients, we'll start with 401k because that's the most common. People know about that. They offer that
Right.
at our, right? So the misconception there is that we need to put as much money as possible in our 401k, right? This is the suggestion to all of our employees that utilize 401k. If your job matches you put into as much as the job matches. So let's just say sometimes our job will match up to 3%. So you put the 3% in there. Why? Because that's free money, right? So you're
Right.
always going to make money if they're giving it to you for free, right? But don't go beyond that. Don't go beyond that. What you want to do from there is have an outside Roth IRA, okay? So a Roth IRA is post-tax money. You have more chances of growth. So we have accounts and we do, business with different companies that we can average anywhere between a 9 to 12% rate of return on a Roth IRA, right? Our 401ks that
Wow.
right. Our 401ks that we're not doing that. Right. And then we know 401ks, we have a lot of stipulations in regards to if we have that emergency. We have to prove hardship. We have to, only way we're able to take it out is if maybe we're purchasing our first home or there's medical things. And then we have to borrow it and then pay it back. And we get charged interest on all those things. But if we have an outside an outside Roth IRA, we have more control over the money going in and going out. So let's just say we have a hardship and we do need to take money out. If we have an outside Roth IRA, there's no borrowing. We don't have to prove to anybody that we need our money, right? So,
No.
and as much as we put in, there's no penalty in taking it out. So those are things to know, when we're planning. And that's why it's so important to have a financial coach, because we may skip those steps. Of course, when the companies are coming to our jobs and saying, go ahead and fund your 401k, of course they want that to happen, because the more assets you put into that company, of course, the more that representative gets paid. So they may not tell us all of the stipulations and the ins and outs of everything that we need to know to make an informed decision. So a Roth IRA is money that you put in that's taxed already. So now when you take it out, it no longer needs to be taxed, right? With our 401ks, that's what we call a traditional IRA. 401k is synonymous with a traditional IRA. So that's money that's put into that account before it's taxed. So yes, it does grow tax deferred. Yes, you do get benefits because you're planning for your retirement. So you get write-offs on your taxes and things like that, up to a certain amount. But it gets taxed when you take it out. Okay, so there is a tax on it when you take it out. With a Roth IRA, once you put it in there, once it grows, it does not get taxed. The only thing that will get taxed is your growth. And that's just saying that, look, in this account, I made $10,000, like I made $10,000 at work. So it'll get taxed like ordinary income, like you worked for it. So it won't be, any high taxes on that Roth IRA. It'll be just like ordinary income, but it gives you more flexibility, more control over your own money. So the suggestion with the 401k, if your job matches, put into what they match. If they don't match, go outside and get a Roth IRA. Okay, so that's my suggestions on those.
Awesome. I may need to go back and revamp my view of retirement.
Yes, yes,
And
yes.
how Roth IRA seems to be more beneficial in all aspects, even from the tax bracket as well as just the financial aspect of what it's going to bring you over a period of time with having it in place.
Right,
Good
right,
information. You're definitely dropping jewels for viewers. I often hear a lot of times individuals they're trying to figure out, and I'm not sure if you can shed light. Is there any
Mhm.
particular pathway to follow when buying life insurance? Is there any particular things a person should know to have in place, or things not to really look at when purchasing or buying life insurance?
Absolutely. That's the core. That's the core of what we do here to educate families, is to understand about the different types of life insurance. There are so many different types out there, and it is hard to understand. Most people will say that they feel that they should have life insurance. They don't really know what type they should have, and they don't understand how it works. We have people that say, well, I already have life insurance, but they may only have it through their job. We help them with understanding why it's important to have insurance outside of your job. And then there's, again, different types. The two main categories are cash value life insurance and term. And so, these are things like whole life, universal life, flexible premium adjustable life, and variable life, right?
Mhm.
And there is a difference, whole life is just that you pay it for your whole life, but our company believes that you should buy term and invest the difference, because life insurance is for dying and savings is for living. And so we want to encourage people, like Ms. Howard said, to save and invest. Um, there is a period of time that we recommend that people should be definitely covered with insurance while they are having, growing their families, they have young children, they have high debt, they may have a house mortgage, right? But as
Mhm.
you move towards retirement, what's more important, the insurance or the money? You need money to live. And so it's definitely critical to understand about the different types and how they work.
And Miss Scott, we could do a whole nother podcast on just what Miss Harper just said really quick, right? Because
Right.
the first misconception is that I'm good because I have life insurance already at my job. We hear that all the time. And what we really want people to understand is, number one, it's your job's insurance, right? People think that it's their insurance, but all we get is a certificate of insurance. That's not the policy. It's the job's insurance. So if we leave the job, they can determine whether or not we can keep it or not. 9 times out of 10, it's no. So that's one thing. But then also to get paid out if something were to happen, if you read in the clause that you have to be an active employee. So what is an active employee? That means that you're working during the hours. So if it happens during the hours where you're supposed to be at work and you're not at work, you're not an active employee, right? So if you're out on disability, for 6 months or longer, you're on disability because you need your bills to continue to get paid. You're not an active employee, right? So
Wow.
then from there, right, you can't even
Nobody's
get
thinking like
insurance.
that, right?
Right. You can't even get insurance if you're out on disability for 6 months, if you're in the hospital, going through some things where you might necessarily, pass away. So those are things that people really need to understand and realize. If they give it to you if they give it to you for free, you take it. You take the free blessings, right? But if you have to pay $1 for it, you may be paying $1 too much, because what if you leave the job? What if the job happens to depart from you? Right? You no longer have the insurance. So it's so important to make sure that we know work insurance is just that. It's just while I'm working at the job, but you always want to secure your income coming in, because guys, that is our biggest asset. A lot of times people think that their home is their biggest asset, maybe their cars, jewelry, all of those things. But the ability to be able to bring in income is your biggest asset. Your time, your ability to make money, to provide. If we think about our families, and let's just use this analogy, guys, really quick. So let's just think of us like a toaster. Say we were a toaster. You had a toaster in your kitchen, and every first and 15th of the month, it popped out $3,000 each first and 15th. Would you insure it? You absolutely would, because if the 13th or the 10th was coming up and it was broken, you wanted to make sure that you can replace it by the 15th, because you need that $3,000 to pop up. That's the
Right.
same thing with our income. That's the same thing with our lives. Our families depend every 2 times or however many times we get paid a month for income to come in. So if we're no longer there, they still need that paycheck. They still need the income to come in. Our children still need to eat. Their lives still need to go on. Our spouses still need to pay bills, right? So we have to make sure that we ensure that. That's the most important thing. So what we do is we make sure at the beginning, why we say it's important to have term, is look, it's going to give you the most amount of coverage for the least amount of money. Right. So we want to make sure that our children, our families are insured, number one, until our youngest child is 23 years of age. So we need to have enough money to make sure that happens. And guys, what I read and different blogs and things, that it takes over $1 million to raise one child.
It
Right.
does.
It takes over $1 million. So sometimes when we see these whole life policies coming in, it may be $25,000, $50,000. That's just enough for burial. Right. But we need to make sure we have that game plan going in, that however much money that we're contributing to our household, our youngest child could be okay till 23 years of age. And then from there, we're working on a game plan. So when it's time for you to retire, you can have a $500,000, $2 million saved. So let's free up more money to be able to invest in those Roth IRAs, to be able to, set up mutual fund college savings for your children. So, get as much coverage as you need the earliest as possible, but let's work on a game plan where you can accumulate true wealth and being able to pass that on to your family.
Absolutely. I think the thing that you said earlier just sort of resonated, that there's a possibility that individuals are paying into benefits that may not be something that may be utilized later on, simply because it could be an accident or not just technically being active. So it's money pouring in, but that money could be poured in somewhere else where we know it's
Absolutely.
a definite turnaround as far as helping families, and not only families, but yourself long term. I think that's a piece that I didn't quite understand before. So thank you definitely for that piece for me, because that sheds light that you think you're covered just because you have it through your job. And in actuality, that's the flip of a coin. It could be a
Right.
possibility that it is covered, but in other aspects is not. That brings me to the other situation that popped up in my head, that individuals pay into these policies. How often do you see families that come to you, where either your policy either has either helped or not helped, with individuals? Well, I'm not going to say not helped, but it has benefited the family in some shape or form, where they have, um, the other policy through the job may have not have covered it, but through your policy, it sort of helped, you know, bridge the gap between what they thought they would have had through their job, but then in actuality is like, okay, well, I'm not getting it through my job, but only because your organization and I paid this policy is able to help me. Um, how often do you experience that piece?
More times than we should, right? More times than not, right? So that's why we are just so excited to be able to sit down with people and educate. Because again, number one, we don't even know that information. That's what captured me, to be honest. When I sat down with my coworker, I work for the state, I work for the school system. So I'm like, okay, I have the best benefits since sliced bread. That's what I thought, right? But then I was
Mhm.
educated on this stuff and I said, hold up, okay, we have to make sure that we get covered and we need that Roth IRA. Those were the two things for sure that we finished at the end of that appointment, just because we just don't know. So we take time not only, and sometimes when we think about life insurance and investment, in the industry and professionals that they go straight into. A lot of times people here, call me and say, "Well, can you just give me a quote?" Absolutely not. We have to educate you first, right? It
Right.
would if I was only thinking about getting paid or collecting money, then yes, I'll just give you a quote. But no, we actually sit down to do a complimentary education. Let's pull up your policy that you currently have. Let's look at your job benefits. Let's go through it so you can actually have a full understanding, number one, of what you have. So now you can make a better decision moving forward, an informed decision, moving forward. Just not just trusting everything that I'm saying. We're going through the facts of what you currently have. We'll call your company with you. We have, specific questions that we do ask to make sure that you have a full understanding of what you currently have. And, those conversations sometimes get heated with their current life insurance policy because they just did not know that these things are in their clauses and in the stipulations. So definitely we see it all the time, but that is exactly what we're here to do, to shed light on what you currently have and how you can make better decisions on, even if it is $20 a month that you're paying into something that you don't necessarily need. Why not put that $20 in a mutual fund savings account? Why not put that towards your IRA, towards your retirement? And who knows, that can grow another 50, 60, 80, $100,000 of however long you save it, in the future. So
Right.
something is, as little as $20 can, change. It could purchase a home and you don't even know, so
Right.
yeah.
And not
And a
only
lot of
just
people
purchase. Oh, go ahead, Miss Georgette.
I'm sorry, I just wanted to piggyback on that because a lot of people will say it's just too expensive, but it's too expensive to not have it. And the money that they are, spending or investing in the benefit, the one through their job, if they have their own individual policy, as Ms. Howard just said, they could free up money that they could use towards savings and retirement.
Right.
Yeah, it may seem quite costly, but when we take back and we trail back on some of the expenses that we spend from day to day, that's not even a necessity. Um,
Okay.
I'm pretty sure that could probably cover the retirement aspect and the IRA costs probably 3 and 4 times over. Um,
Yes.
I just think back even with some of the restaurants, you probably could go get a meal for like $5, and one meal now was about 15, and
Come
that's off
on.
one day.
Right.
So, if you can take a $15 meal and just say, okay, let me noodles and noodles for this day instead of a $15 meal, I know that's going to be beneficial. And even if it's one of those things that it's not, you don't see the benefit directly, something happens to you that, Lord forbids.
Yes.
But you just think about the what you're leaving your kids, what you're
Right.
leaving your family to cover financially, so that they're not left in a turmoil of expenditures and things that you didn't think you would need or they would need.
Right.
Um,
And then
so
also, let's not retire at 70 and 80. Sometimes we see people working way too long. And, we have a good plan in place now, where we can accumulate that $500,000 to $2 million by starting in their 20s, like my son, which is another amazing portion of it. He started at 19. He had a part-time job at Foot Locker while he's going to college. And I said, look, you're going to put $100 a week. He made good money. Instead of giving it to Jordan, instead of giving it to Foot Locker, put $100 a week and you don't even have to do that. $25 a week, $100 a month, starting at 19 years old, you'll have $500,000 in your 50s,
oh wow.
you know? So then now you have more choices to have those golden years. Now you can do more. We were just talking on a training that we do with our agents in regards to, some cultures, they start a mutual fund at 5 at birth. You put $1,000 into a mutual fund, and then you put $100 a month. About time your child is 20 years old, they have $300,000. So instead of all the extra toys that they don't play with anyway, they like to play with the things that they're not supposed to play with. You give them $100 for their birthday. Their family members come together and do that, and they put it in a mutual fund, and it grows, and we can set them up for more financial success. So all of those things are, things that we stir up with our clients. And it's like, wow, I didn't even think of that. Right. And it's just a beauty that, number one, we get those licenses, and then we're able to now help people that we love, like our children, to not only say, look, this is what you need to do, but we have the licenses now that we can sit them down and say, hey, this is what you're going to do. With our children, this is what's going to happen, to make sure. So yes, all of those things are just
De-
beautiful.
Definitely so. Children don't quite, there's adults that don't quite understand the impact and
Right.
magnitude of savings. So definitely supporting your kids to know, like, even though they don't quite understand it as they get older, they
That is early
appreciate a
thinking.
lot more. A lot
So
more.
they-
Um, so for someone like your son that started, you said at 19,
Mhm,
at what point, I know you said anywhere like $100 is what you shared, but
mhm,
even still someone can go in and put in $20 or $40.
yeah,
At what point of his life, because let's use him for an example, since
mhm, mhm.
at what point of his life would he start investing more and saving less because of his early start?
Okay. So when we're talking about savings, we're 100% savings. All you need is 3 to 6 months worth in your bank, right? So three to
Okay.
six months, whatever bills that you have or what you need liquid that you can go today and go pick up. 3 to 6 months, put in the bank. The rest of that goes into your IRA. That's your investment. The rest of that goes into a mutual fund, because now that money is going to start working for you. And the beauty of our IRAs, you can get the money within 2 to 3 business days. So it'll automatically go back into your checking account within 2 to 3 business days. So once you have that 3 to 6 months worth of emergency savings in your bank, why? Because the bank is only giving you 0.01, 0.02% on your money. And they don't educate us on, you have enough money in the bank, right? Because why? They take that money and they lend it right back to us. So all the money that's in that we put into the accounts. They put it together and they know how much they can loan, our neighbor for the house that they just purchased. And they'll charge them anywhere between now interest rates are so high, but 4 or 6% on that loan. So they're making money off of our money. And then, then our cousin, they purchase a car. That loan comes from the bank. The credit cards that we get come from the bank. And then they charge all this money. So they're making money. They're getting that, rate of return off of our money. So just put 3 to 6 months in the bank, right? Everything else goes to your investments. Everything else should be in a vehicle that's going to yield you some rate of return, because your money does not sleep. You can put it in that bank. It doesn't get sick. It doesn't get tired. You put it in the bank and then it'll continue to grow for you. So once you have that 3 to 6 months, you don't need to save any more in the bank. You put it in those vehicles that we just talked about.
Awesome. So I have a question.
Yes, ma'am.
I've heard the word annuities used quite often. What is annuities and how are they beneficial?
Annuities. Yeah.
Annuities.
Yeah.
Oh, look at that. Thank you. You
I was
corrected me.
wondering.
That's very sorry. So annuities are extremely beneficial for our years when we're coming up on our retirement. So number one, you don't use an annuity until you fully max out your IRA. So you're able to put in $7,000. They just increased it to $7,000 a year. So you can, put that in monthly, but you max out your IRA by saving and investing $7,000 a year. Now, once we start getting to like our 40s and 50s and things of that nature, where that you need this guaranteed income to come in, we start using annuities. It is a great retirement vehicle for that. And what an annuity does is it says, look, the amount of money that you're going to put in here, there's a guarantee that it will not drop. You won't lose. And we know in the market, even with our 401ks, there's some type of volatility, right? There's this up and down, right? So generally, the tradition of our markets is that we'll have in a 5-year span, 1 down year and 4 up years. But once we start getting to retirement, we don't know what year is going to be the down year. So we can't risk having that down year be the year that we retire. So we put our money into an annuity, right? So it guarantees, it gives you a shelter on making sure that whatever you put in there, you'll never get less than that, right?
Wow.
But different types of annuities have different types of growth in it. So you still can get a 3% growth, 5, all the way up to 12% rate of return on an annuity, which is amazing. But the thing is that it has to sit there for a certain amount of years. So that's not a liquid. It's not a account where if I have an emergency, I can go to my annuity. That's not what it is. So that's why you still want to have your emergency savings, your IRA, all of those things there. But from there, it gives you a very safe way to make sure that you plan for retirement. And then when it's time to retire, they'll say, depending on the type of annuity, there's different options on that. It'll say, look, you can have a guaranteed $1,500 a month, $3,000 a month payment each and every month to you to make sure that you will not outlive your money. So that's what an annuity does. It gives you a guaranteed payment until, sometimes they say, look, I want it for the next 20 years. Some people say, I'd rather have the lifetime option. So there's different options that you can use with the annuity, but it gives you a very safe way to retire for saving, for your retirement, but then also provides, it could be a lifetime or a certain period of time payment guaranteed to you over, your life in your retirement. So when we start getting in our mid 40s, 50s, and that's when we start really looking at annuities to make sure that we have some type of cushion and shelter and guarantee to make sure that I won't have any less than this amount of money when it's time to retire.
Oh, a lot of information.
I feel like this guy's getting a financial education here.
That's
Getting some.
that's why we sit and we plan and we talk to our clients and we say, what is your game plan? What do you want to do? What are your goals? How much money are we working with? And all of those things to make sure that we can map it out. And sometimes it does take more than one appointment. So it's not like we sit down and say, hey, and then we come up with this game plan, we leave. We follow up with our clients. We meet with our clients. We talk to our clients to make sure we check in and say, okay, is this what are we following the game plan? Do we need to tweak it? Did you get married? Did you purchase a home? Did you switch jobs? Did any goals change? So then we can come back and revamp those things. And when it start, okay, now it's annuity time. Now it's, IRA time. Now we have the 3 to 6 months worth of emergency savings. Oh, we just had a baby, so we may need to increase our life insurance, or our children are now grown, so we may need to decrease it. We may not need as much. So then we can tweak along the way. So it is like a continual process to make sure that we get to our road of financial independence.
And with this discussion today, you and Ms. Harper has given us the pathway and road to financial freedom,
Yes.
based upon the information that you've given us. For viewers that is still on the edge between should I reach out to your organization or I think I'm okay, what useful tips would you give based with the life insurance and even with the retirement aspect that may just go ahead and push them and encourage them like, yes, let me go ahead and reach out to Ms. Harper and Ms. Howard regards to services.
Okay.
I
So
would definitely say yes. And I would I would just, in regards to the insurance, yes, yes, yes. Even if you have a plan outside of your job, some people don't even know how much coverage they have. They don't know what type of plan it is, the term, the length of coverage or anything. So yes, it's not going to cost or hurt to look at that. Better safe than sorry, right? We've sat down with many people and they found out along with us that they didn't have what they thought they had. So anyone who is on the fence as to whether they should or should not, then the answer should, if you're wondering, you're not sure, then the answer should be yes.
And I'll piggyback right off of Ms. Georgette, right? So absolutely, the answer is yes. And a lot of times what we do see, even with our upper income clients, right? There's no one company, there's no one, organization that has a capitalization of everything, right? So you always want to make sure that you double check, you triple check. We have different, that's why there's so many different doctors. We don't go to the foot doctor to check our heart, right? So definitely you want to make sure that you have, a team of individuals that can help in every way, shape, or form. And with the life insurance, right? Have you read your policy front to back, word for word? Are you licensed? Are you well versed in those aspects? And even with our 401k plans and our retirement savings, are you well versed? Are you licensed in those areas? Sometimes we get our sister to help, and our sister is a dentist, right? Not a financial, not a financial professional. So, we don't go to, our mechanic for legal advice. So just make sure that you have a financial coach. So yes, you should always, check and look. If you are already set to go, if everything is in order, that's great. But at least you did a double check on it to make sure that it is. And if not, then look, let's make one minor tweak here. Let's switch this up, and it could cost you, or could gain you an extra $100,000, $500,000 in retirement. So definitely always double check.
Awesome.
Yeah.
Oh, so many other questions that I still have. And I'm pretty sure so many other questions that our guests and our viewers may have as well with watching this. Could you give us a way of contacting you in the event that these individuals may have questions or they're interested in following up and establishing a life insurance policy or establishing a IRA account with you guys? That would be great.
Absolutely. I don't mind putting my number out there. My number is 757-559-5482. Or they can reach out and friend me at Facebook and send me a DM, and I will be more than happy to get some information to them or schedule an appointment.
Awesome. Thank you.
Yep, and the same as me. I am on Facebook. My name is Monet Howard, as you'll see it on Facebook. And my telephone number where you can reach me is area code 973-380-6694, and definitely would be able to and love to be able to talk to individuals in regards to, not only life insurance, but the investment portion. Or if you say, look, I want to join this crusade and I want to gain some licenses and help my family members and friends, I want to be a catalyst of change in this area. Definitely, we do provide comprehensive training, and we will provide licensure to be able to go ahead and do that. And just one short piece that we did not mention, I just want to make sure there are some other things and products and services that we do offer families. We do partner with a big mortgage company where we can also help write mortgages as well. So you can, get a mortgage originator license, but we do have that as well. We offer that. So if people are looking to purchase homes for the first time or refinance their home, definitely they can contact us for that. We do work and partner with, car insurance and auto and home insurance companies. We do help with home security and all of those things. So definitely we can help in all of those aspects. We call ourselves like a one-stop financial supermarket that makes a house call, right? So definitely we can help out with all those things. But again, everybody can find me on Facebook, Georgette, as well as our names, Monet Howard and Georgette Harper. And again, my telephone number is 973-380-6694.
Thank you so much. I am definitely full of knowledge this morning with all the information that Ms. Howard and Ms. Harper has provided. Again, thank you from Chrissy's Voices of Reasons is the podcast. Of course, this is a birth of or connecting to my nonprofit organization with Chrissy's Place of Refuge, where we are looking to make an impact through the community. Of course, again, I like to share some information about myself. We are doing events, programs that we're helping individuals throughout the community, ranging from book bag drives, um, giving back to the homeless, where we give tents and things of that sort to help those less fortunate. But overall, my mission is to provide the more permanent relief and support that individuals are looking to have. Again, some individuals may not have the supports financially, knowledge wise. They may not have the guidance in place to navigate the process between maybe going through and finishing their high school diploma and then going through and finishing college, and maybe providing that child care component so that they are able to do so. So long-term goal, I'm hopeful that we're going to get the resources in place so that we can provide all of these resources in one centralized location so individuals have the opportunity of more permanent change in their life. So again, follow me. I am on Instagram and Facebook. Utilize LinkedIn and Twitter for the Chrissy's Place of Refuge, but not as much as I do Facebook and Instagram. But definitely follow us and some of the events that we're looking to have throughout the year. Thank you, ladies, again for your time, your insight. Definitely a rewarding experience. So where I'm able to take some information back myself and revamp some things and how I financially plan, not only for myself, but for my kids as well.
Absolutely. Thank you for having us.
Yes,
Thank
thank
you
you
as
for
well.
having us. It was so much fun. We could definitely do it again if there's more
This
questions.
is definitely her passion. I'm telling you, it is definitely rubbed off on me.
If you ladies are definitely open to it, I'm definitely open to it as well.
All righty. Well, thank you so much.
Thank
Thank you for doing this.
Thank you so much.